Hello, everyone. My name is Daniel Pinho. I'm the VP of Business at BAFT, and it's a pleasure to be hosting this uh, webinar with the SBA and some banks. I think it's a good program, and we have excited to be announcing this and what's been happening in the sector. We're going to have a good panel and people from SBA explaining the program. I just want to remind everyone, you'll be on mute and to please use the Q&A to submit questions, not the chat. We won't have access to the chat. We won't be able to see the questions. As I'll take a look at the questions on the Q&A and address to the panelists. If you want to address to anyone specifically, please let me know. And this webinar is being recorded and will be available in the future for on demand. So I just want to remind everyone. So without much further ado, I'll let the panelists introduce themselves, and then we can start. So maybe we start with you, Daniel, or Gayle. Gayle, start with Gayle.
Hi, good afternoon, everybody. My name is Gayle Roenbaugh. I am the SBA Office of International Trade Director for the West region. That's Chicago down to Texas and everything west of there. I've been with SBA for 3 years, maybe a little more. Recovering trade finance banker, so well understand the issues you guys are going through, and happy to be here today. How about I turn it over to Carson for his introduction.
Good afternoon, Carson Strickland. I'm with Regions Bank. I office down in Mobile, Alabama. Big global trade hub, Mobile, for those on the line. And I've been in trade finance for a little over 25 years, all with Regions. Glad to be here today.
Okay. We go to James.
Good afternoon, everyone. James Matteson, First American Bank, headquartered in Chicago, Illinois, with a few locations in southeast Wisconsin and south to central Florida. Been with the bank for almost 13 years now. Started in our trade finance department and then worked into our commercial lending team, and now I'm the SBA program manager here at First American. Welcome.
Thanks. And that leaves me as the last panelist. So my name is Dan Pische. I'm the Director of Trade Finance in the SBA's Office of International Trade, based in Washington. Been with the agency for going on 4 years. Prior to joining SBA, worked as a commercial banker in the trade space, but also SBA. So happy to be here with you all, highlighting the new working capital pilots and kind of the program's creation, and ultimately the role it'll play for exporters that came out of the feedback from you all. So, Daniel, I'm looking forward to the discussion.
Thank you, everyone. And I think with that, since we're also excited, I think this is a pilot program. I think, Gayle, can you introduce, for those who are not familiar with the program, what is this program about and how does it work?
Sure, you bet. So those of you on the call may or may not be familiar or have worked with Exim Bank in the past. The Office of International Trade is very similar. So for your small businesses that might be confronting challenges with financing, we have various solutions that can help them, and the obstacles they often cite as holding them back. We offer such things as business intelligence, grants, financing, and market access support. We mirror what SBA is doing as a whole, with education, technical assistance, and then financing tools, which is what we're here to talk about today. Like Exim, that you may be familiar with, we do not direct lend. We offer guarantees to you all to entice you to be able to make loans to that small businesses. And as you listen to this webinar and begin thinking of new ways to expand and serve your small business clients, we want to help arm you with the tools that you need to support your goals. We offer 3 export programs, such as the Export Express program, which is a small line, 500,000 max, 90% guarantee. You can use this to visit foreign markets. to finalize an export sale even before that is done. Our international trade loan is a term loan. If your clients need to expand internationally, they can purchase like a warehouse close to the port because that's where they're shipping out of. That is a $5 million line that also offers a 90% guarantee. And then as your small business clients are growing, you can then utilize the export working capital program that's very, very similar to the export working capital program. And, we want them to be able to graduate to an EXIM working capital program or even to conventional financing. The fourth program is the main focus today. It's the working capital pilot program. It's revamped to meet the needs of today's small businesses. I kind of call it, in the Lord of the Rings terminology, one line to rule them all. It supports both domestic and international sales under one line. Before you had to do separate lines for an export related transaction and one line for domestic. This line encompasses both. It offers transaction-based or contract-specific revolving lines. It also offers the traditional asset-based loans with the regular reporting that goes with it. Lastly, I'll put in a plug for our staff. We have working capital subject matter experts around the country that can help you tap into these solutions. If you need to find a list of those subject matter experts, you can contact Dan or myself, Dan Pische or myself, and we can direct you, or you can visit to the website. Thank you, and I'm turning that back over to Daniel Pinho. Too many Dans for the next phase and getting into deeper dive into our panel.
To Daniel P's here, yes. So,
Yeah.
But we'll handle. Maybe I'll throw it both to Carson and James. I mean, how the SBA programs are structured within your banks, and just to give them, there are several banks on the line, they can make a parallel, maybe how you're structured.
I'll go first, James. So, we're a super regional bank. So we have obviously I'm in the trade finance group, so that's what I do. And we have a team on the relationship side as well as the operational side that support that business. And we're out calling, obviously, on exporters. I think there's a lot of folks at this meeting today that are doing that. It's the trade finance business. So that's kind of half of your target audience. It's on the export side, if you will. But then we also have an SBA group, and they obviously focus on all types of SBA loans. And so we really have found some success on the export working capital product, at least over the years, of really just sort of partnering with that group internally. We understand trade. We understand kind of what exporters need in their business from a working capital standpoint. And then we've been EXIM working capital lenders for 35 years or so. And so we have a back office that monitors those loans. And from a monitoring standpoint, it's very similar, right, to the EXIM Bank loans. What my group doesn't understand so well are the actual ins and outs of SBA guarantees. And so, EXIMs we sort of own that process. We know how to file claims. We know how to work within our delegated authority, et cetera. SBA, from that standpoint, is fairly different. And so we've got a group that are really experts around making sure your guarantees in place, paying the fees to SBA, the reporting requirements, et cetera. And so we have found that sort of partnering between the two groups is critical to both originate and then provide ongoing monitoring and then ensure guarantee enforcement in the long run.
Yeah, that's awesome, Carson. Thank you. For First American Bank, we're kind of a smaller shop, about $7 billion in assets in total. We kind of use the SBA as a tool in a larger toolbox here at the bank. We manage a portfolio here of clients that we look to help when needed. So we don't have a national staff that's going around knocking on doors looking for SBA loans. Usually I'm working with our relationship managers and business bankers when something comes in that has maybe a little hair on it, or something that, well, we can try to fit it into this pocket, but it really doesn't meet conventional or traditional lending standards here at the bank. They call me or my colleague and say, hey, James, Joel, can you put this into an SBA box? Is there a way we can meet credit elsewhere? Is there a way we can get this deal done with an SBA guarantee? And so we do our best to try to facilitate that, whether it be a regular term loan, a simple little express line of credit, or something that's more important in this discussion is an export working capital program, or the new working capital program. We've been utilizing all SBA products for many, many years. We have our own trade finance desk. We have our own ABL desk that help facilitate the servicing of those facilities when needed, as well as a host full of analysts when it comes to some transactionally financed contracts, whether in the export or domestic space. And with this new WCP program, I'm really excited about it. We've done one so far, and we're looking to do another one in the coming weeks to get approved. But we're looking forward to utilizing a lot more than we have been with the contract cap line or the working capital cap line program in general, because it was a little challenging to get it across the finish line, and there was some pitfalls in regards to making sure your I's were dotted and T's were crossed with the SBA. Whereas this product is kind of the best of both worlds in regards to the export working capital program, as well as the line of credit program that SBA still currently has under the cap line program.
Maybe Dan, I mean, just does this experience SBA seeing across the banks, because this is a new program? Typically, SBA, it's not associated with a revolving credit line except for the export working capital. So maybe you can say a few things.
Sure. Yeah, thank you, Daniel. Yeah, this is what we're seeing, and I think what Carson and James did a good job of describing was some of the separation between departments within the institution. Right, Carson is a super regional. You have a trade area, you have an SBA area. SBA is a large product nationally, so it's not uncommon for it to have its own group. Whereas the XM program is owned by the trade department. The SBA department or the SBA programs cross a variety of different needs within the institution, from small dollar lending to maybe support for the retail network, up into the business banking or lower middle market. And one of the things we noticed, James alluded to the Capline program, which is the legacy revolving product. We have our EWCP, which is modeled as a structured trade product. But you're right, Daniel, the focus wasn't really on working capital, and we think that's a good opportunity for our programs. We just concluded the fiscal year. Our press release on our final loan numbers will be coming out shortly. The vast majority of the loans issued in any given year, well north of $30 billion, are going to be term loans. So north of 99%. We have an opportunity to grow market share. That's how I look at it. But it also complements our standard and primary business, which is mostly term lending. That's going to be capital expenditure, business acquisition. We think working capital is really a good greenfield for the small and kind of medium business lending environment. But we have to bring the SBA department and call it the trade or the working capital, or just the groups that are going to be involved on a line of credit from a day-to-day basis together. And the idea behind launching a new pilot program, which we developed in concert with our colleagues in the Office of Capital Access. So the heads of Ginger Allen is the head of the 7A program. We worked on this program for close to a year before it was announced in June. Was to give a build around product for lenders, so that from an industry perspective, from an SBA perspective, we think there's a huge need for working capital, whether it's from contracts or trade or initial asset-based lending. We needed to give the industry, we needed to give our lending partners a build around, and we thought having a domestically focused product would be an important component. Now, for Gayle and my day-to-day work in the Office of International Trade, we also think that from a trade finance perspective or a trade gap perspective, having a holistic solution for an SME exporter is really important. A lot of companies' volume of export trade will ebb and flow from year to year, and having a facility that a business can maintain regardless of their outstanding contracts, I think is an important tool that the lenders who are working with small and medium-sized exporters should have in their toolbox.
Okay. I mean, picking up on the export, I mean, maybe Carson, since you have more experience. So how you position the value of the SBA export programs with the exporter and potential borrowers? And maybe, I mean, oh, go ahead.
Yeah, sure. I mean, so the export side's a little easier because, us, I think like most banks, if it just comes down to something as simple as foreign receivables, you're not going to lend against them for the most part, unless they have insurance or something like that. And so, an exporter that has a working capital gap in their business, there's a few different ways to get at it. It's EXIM, credit insurance, or SBA for just receivable financing. And so that's a little bit, I think for companies that are where exports are the dominant part of their revenue, I think to Dan's and James's point, that's what's sort of driving this domestic product, is because not a lot of companies are 50% or more sort of export businesses, right? They're there and they can really benefit from the EWCP product, but there's not that many of them in the scheme of things. And so for those exporters where it's a large part of their business, they really need some solution to help bridge the gap. The SBA product specifically has, in addition to being an ABL product, right, which I think a lot of folks understand because you could get there multiple different ways, but there's a purchase order financing component to that product that's extremely valuable. And so really, when you're talking to an exporter, they have large contracts during the year. Export is most of their business, or a very large part of their business. It's really sometimes the only way to get there. And so it's not, you're not having to really sell them on it so much. It's more almost of an internal thing around, what's the credit quality look like and the management of the company and things like that become more of a challenge. Because I really do think, and Dan did not pay me for this, but the EWCP product kind of sells itself. I mean, it's really one of the few ways to really get exporters the working capital they need.
Okay, maybe now one for James. I mean, when there's a new loan opportunity, it's been discussed within your bank internally, when and how your team brought into the discussion. What's the internal process?
Yeah, I tell all my folks that work in our commercial lending team to try to reach out to me as soon as possible, so that we can at least figure out if there's something we can do on the SBA side. Now, of course, they're trying to get things into a conventional box and make things a little simpler, but try to get me involved as soon as possible to just do a kind of a quick kick of the tires, so to speak, as it relates to SBA eligibility, and just to see who this new company is. And a lot of times it's new prospects, and maybe by me just asking some probing questions about, do they sell to Mexico or Canada? Do they do any types of sales overseas? Because a lot of times, and I've had a recent discussion with a relationship manager, and they're talking about buying a new piece of machinery. And I knew them from my prior work in our commercial lending team. And I was like, wait, does this company still export mainly to Europe and or Eastern and Central Europe? They're like, oh yeah, they're still doing that. I'm like, well, that's how we can, let's get that into kind of the international trade finance loan field. And without having those discussions up front, we may have been just doing a simple 7A loan, which only carries a 75% guarantee rather than 90% guarantee. So as someone that's trying to assist getting loans on, book loans for the bank, at the same time, if I can sweeten it somehow with a division head or a credit manager who's trying to make those decisions, the earlier on that I can be involved, the more kind of ideas that I can start spreading around, just to see if there's any way we can get something across the finish line that may not be there, or it's something just nothing was really talked about because they were kind of solely focused on one thing.
That's the same to you, Carson, or how does it work internally, or especially if you have separate groups or with our asset-based lending group that's more familiar?
Yes, very, very similar. I would say because I've got sort of a relationship, / sales team within trade, they're out kind of proactively calling on these companies and then sort of figuring out what's the best fit. Because, sometimes SBA doesn't work if it's over the dollar amount, or, there's not going to be a personal guarantee if it's a financial lender, for example, or things like that. And so we're sort of figuring out the path to take within trade, whether it's XM or SBA or credit insurance, if we're just talking about working capital. And then if SBA is a fit, we have SBA specialists. We get plugged in. We go through that underwriting channel with obviously input from trade around structuring and things like that. It gets approved in the SBA underwriting channel, gets closed in the SBA underwriting channel. Again, kind of, locked at the arms with trade and SBA during that process. And then once it's closed, our monitoring team and trade does borrowing bases, does purchase order advances, and all that stuff. And then hopefully outside of your regular servicing, we're not having to do anything with that guarantee down the road. But if we did, obviously the SBA team is going to be, we'll be heavily reliant on them if something were to happen from that standpoint.
But Dan, maybe you can speak about, now you can have basically one loan for the dual purpose, right? For the domestic international. This is transparent. From the SBA perspective, any changes, anything, or people need to be paying attention to?
No, the program is designed to run on the same rules. So it's a pilot program. It's in its launch phase. There will probably be some updates during the 3-year pilot period just to, accept feedback from the industry, make corrections and clarifications. But overall, again, we spent a good amount of time during the development phase. We had a solid foundation with the export working capital program. And we met with lenders, we met with industry groups. So we really tried to do our homework and approach it from the perspective of a build around. So, Gayle knows I'm a Lord of the Rings fan as well. So, one ring to rule them all. But have one program that is the starting point. So when an opportunity presents, in a lot of ways, if there's a revolving component, there's a working capital component above, say, $500,000. That's the cutoff, the demarcation line between the Express program and where I think the working capital pilot or the export working capital program come in. Then that's the starting point. And then from there, there's an export component in international trade. Now we need to get trade in, and it opens up additional products like EWCP. But we thought it was really important to standardize the rules so that the lender can easily flip between programs depending on the need. And also give an opportunity to bring in some of the international trade resources to the small business or SBA lending groups. But that really started with a program that could do international and domestic under one loan. So it's any combination. It's not, while we're here talking about the ability to support exporters, it can do 100% domestic, it can do 100% export. We did recognize that a lot of SMEs who might be transitioning into exporting may be doing so on a limited basis. So we had some pretty simplified rules for open account. So limited situations where maybe you wouldn't want to have insurance for a one-off order that's relatively small, ultimately allowing the business to grow into that and then have the typical structure come in place. So we approached it both from a product side in terms of making it user friendly, but ultimately on the customer side. You think about a lot of SMEs who might say manufacture and sell capital equipment or just larger ticket items. You might need to cycle between export lines and domestic lines based on where your opportunities lie isn't always the most efficient for the bank or the cost effective for the borrower. So if you have a company who can maintain a line to support their production of equipment, then it doesn't matter where the buyer is because you can load international orders on, you can load domestic orders on, and it really strengthens the hand of the business and puts them in a position where they know what they can finance, they know what they can cover, they can have that conversation proactively with the institution. But when it comes to now, one of the challenges is obviously it's not just international, so it isn't just involved. So it's how does the industry respond, and that's a lot of what we're here to discuss today is how the trade resources within the institution can be a real asset to the SBA groups as this new program is launched.
Now, picking up on that, maybe for both Carson and James, did you have any or go through significant change or an existing credit policies to implement the program, since it's fairly different from what typically an export working capital works and typically how a 7A work? Was it smooth? There was specific changes, or you have to bring in more people to explain how the program works?
Yeah, I can take this one first. not not a whole lot to change was really needed on our end. I updated some procedures and policies on our end just to make it more in line with what we have going back to when it was effective on August 1st of just a couple of months ago. We have in place the facility that was really created, WCP, is something that we're very familiar with as an asset-based lender and a user of the export working capital program for a number of years. And to Dan's point, and that's probably Gayle's earlier, it's taking the best of a lot of worlds and moving it all into one. One of our main issues with trying to get some of these loans out the door for some of our customers that usually, sometimes fell by the wayside was because of the cost. The cost is now more in line with an actual line of credit facility, for which the whole purpose of an SBA loan is to get someone, into whether it's trade finance for EWCP or domestics for WCP and EWCP now. But a lot of times, they'd see that shock of that fee that was associated more with the term loan lending and not so much with the working capital lending. And now with that being kind of more in line with market, and especially the idea is for people to graduate out of the SBA. So a lot of folks didn't want to spend $80,000 to $100,000 on a line of credit that they only use for a couple of years. And with manufacturers are making large widgets or projects that go on greater than 12 months, that was very burdensome for a lot of folks. So we pivoted pretty quickly to making a few adjustments internally, but we're very familiar with what WCP kind of put out because we already kind of do this conventionally, and it kind of really fit our conventional lending model already. And we just had to make a few adjustments as it relates to, transactional versus asset based and when to use it and, how to apply certain advance rates and stuff like that. Some of the granular details, but, for us, generally speaking, it was seamless because we have been doing it for quite some time conventionally as well as under the SBA program. But for a lot of folks who haven't been doing it very often or never really wanted to get into it because of costs or the underwriting or the servicing, I think this new facility will help assist kind of that hesitancy moving forward because of all the things I just mentioned previously.
So James, you're way farther ahead than us, so congratulations on getting that done. So we're still working on from sort of a look. We know how it works because we do WCP pretty well, and so we're further ahead on procedures and things of that nature. Like we kind of know how it will work functionally in the bank and how clients will use it and benefit from it. And we have a pipeline of new opportunities with existing clients and some prospects for the product, but it's an expansion of a solution, and so we have to do a little bit more work internally to get that expansion approval done, if you will. But don't think that it will take that long or be that difficult, but it's just a process, and a lot of folks on the call will can probably feel my pain there if you're a little bit larger bank. But that's just the way it is. It's part of it. So, but we'll get there.
Well, maybe you can share the best practices. What has been working? How successful on your side? I mean, or how if you're already bringing in your ABL group to this. Anything you can say? I mean, what's good? Already working well.
Yeah. No, our plan is to really originate, approve, underwrite, monitor all that, just like we do to EWCP, and same folks involved. Same general process. I know EWCP can be a little more aggressive on the export side than the working capital program can be. That's, I'm sure, Dan, intentional, right? Because of the heightened risk with trade financing that is real. Let's not pretend that it's not. So with cross-border trade. So, but yeah, we're going to do the same process for the working capital product that we do with EWCP today.
Because and how I already share a lot of and you mean, but so no material changes, no or how are you internally communicating this? Maybe that's how getting the word out. James, I don't know since you're already using the program throughout the year, or how's been the actual implementation?
Yeah, from the moment, I think it was April or May when the initial kind of notification or sometime around there when it was like, hey, there's this program coming out. We don't know when it's coming out, but it's coming out. And here's kind of a top line highlights of what it's going to be. I already was going into, weekly or monthly meetings with sales teams, working with our HR department. I do a training, business account training once every couple months for new business account training. It's a very small little thing, but every time I get a chance to talk to folks internally, as well as if I'm talking to folks externally as well, but mainly internally, getting them prepared. Like, hey, we talked about this facility. It didn't really work out because of the fees or the structure, or it wasn't going to work. It was too tedious to put together. Hey, by the way, let's see if we can revisit some of these prospects or transactions that we kind of put to the side temporarily because there's this new product that's coming out. I don't know all the rules yet at the time, but it sounds like it's going to be very similar to what we're familiar with in the export working capital program world. And it's going to help facilitate us to kind of further relationships with our customers. We're not a huge transactionally financed group here at the bank. So when we look to bring on a customer, we're looking on to see what else we can provide them. So if it's a term loan, hopefully in the future we can get them into the working capital realm if need be, or vice versa. They can't get financing from anybody else because nobody does purchase order financing. Well, that's how we can kind of bring them into the fold with not only EWCP, but now this WCP program, where the previous Capline program was quite challenging to underwrite and service because of the weird rules that were more associated with the term loan financing than a true working capital facility.
Okay, maybe some specific sectors. I mean, just because some questions. And how does the WCP work for government contracting? If you have a comment, I don't know if you use it. I mean, maybe Dan, you can
Sure.
Be specific. I mean, that's.
Yeah, we actually looked at government contracting as one of the bigger upsides out of the program. If you think about it, it's quite similar to a large structured trade transaction, right? Large project, large buyer, creditworthy buyer, but you got some performance risk of the business, you have concentration risk, but overall, quite similar. So yes, the working capital pilot can support government contracts. We think it's an important tool. There were over $164 billion of government contracts issued to small businesses in fiscal 23, so a little more than a year ago now. So having a tool that can finance the direct costs is really important, and that's what the WCP will do. So whether it's a manufacturer exporting equipment to Europe or whether it's a government contractor here in the U.S., the way the WCP would support that industry would be effectively providing financing for the project based on the direct costs as they're incurred by the small business. So whether that's on a monthly or a periodic basis, you're requesting advances on basically the COGS is the cost of goods sold as you incur it as the contract pays. It comes into a dedicated account, pays down the line, and then the remaining funds are remitted to the business. So we think that the WCP will have a lot of impact on the small business government contracting sector, in addition to manufacturing, and then any just front end capital intensive industry. You think wholesaling, where there's a lot of inventory, that I think is where it starts to move into more of the asset-based space, can be an important tool. But anything that's just capital intensive, I think can really benefit, especially if it has that purchase order component, which I know Carson and James have both commented on, and how kind of the role that plays within the institution. The ABL side is available generally; you can find a way to get there. But when it comes to the purchase order side, we think that's a really important aspect of the program.
Yeah, maybe picking up on that too. I mean, and what about using for standby letters of credit? I mean, how does the program work in this case?
Yeah, we had inside of the EWCP and as a provision of the XM program, the working capital guarantee as well. One of the biggest benefits is that it can support the issuance of a standby. Think of it most often as an advance payment guarantee. The way it works with our program is we require 25% collateral securitization. That can be cash in a lot of cases, or it can be ABL line availability. But then you wrap the remaining portion in the guarantee and issue it. So it really, imagine a company gets $1 million deposit, they put $250 on the side. The letter of credit is issued through the EWCP or WCP loan. The business gets to keep the other $750,000 to put toward their working capital needs. So it can really change how a business and how the lender structures the financing around a contract. And then, the both WCP and EWCP will support letters of credit that are related to a specific project. We're not talking about LCs that are issued for facility leases or anything of that sort. So it's think of it as really tied to that project, and advance payment guarantee being the central piece. But we actually think from an SBA perspective, the majority of small business exporters that we're working with are going to be predominantly domestic. We had a study that was published last year that found that of the SMEs who export, they're 90% domestic, 10% international on average. So we needed to build all the functionality that we needed for our export program into the WCP so that it's available in the domestic market, because we think that from our perspective, with our user base, with the lenders we work with, that will be the loan solution that the vast majority of exporters use. And then we have the EWCP tool that the lender kind of puts in or upgrades to on a deal by deal basis. But we really wanted WCP to be the central pillar of our working capital program.
Thank you. We're starting to get some questions on the Q&A. Please keep them coming. I'm going to start with the first one. Is there an uptake on interest from non-bank ABL lenders focused on the business banking and middle market, or mostly traditional commercial banks? What has been the SBA?
Yeah, I think SBA lending is its own specialty, and it requires licenses. So the vast majority of SBA lenders are licensed institutions. There is what's called the Small Business Lending Company license, or SBLC. There's a handful of those licenses out there. There's a window that I think actually closes very soon. So I think there's interest in it, certainly, but it does come down to is the lender, bank or non-bank, able to offer SBA lending? And if they are, I mean, that's where, to Gayle's point earlier in our conversation, our team is here to assist.
Okay.
We are optimistic.
And the next question is to James and Carson. You discussed collaborating with RMs, SBA subject matter experts, operations. Could you elaborate on the challenges you encounter in these interactions? That's a lot. So.
Yeah, I can take it on my side first. So for us, like I said earlier, we use the SBA as a tool when it comes to kind of figuring, next steps on certain transactions. And so we currently don't have the, software that says, okay, great, this is going to be an SBA loan. Let's toss it into our software that says, all right, let's do an SBA loan. So for me, not every single situation is brand new. I mean, as I continue to make some changes here and streamline things at the bank to get people more familiar with SBA lending, it sometimes can be a challenge because I'm always dealing with different analysts and underwriters and RMs who, some are very well versed and can answer the questions that folks have relating to SBA lending, and others are just kind of getting their foot in the door, or we have a crop of new analysts or underwriters, and they're used to just doing conventional lending. I have to provide them the checklists and the procedures on, hey, you do conventional underwriting like X, but you have to add in Y, Z, A, and B to get across that kind of underwriting SBA line. And having procedures and checklists and things that you're in your toolbox or in your playbook to help folks assist you getting across the finish line as it relates to underwriting and closing is very helpful, because what you don't want to do is not being prepared, because what inevitably is going to happen is if you do these new loans or you do some type of financing and you close it, and a couple of years later the deal goes bad, you want to make sure that from the beginning you got everyone on the same page, you collected all the information you're supposed to collect and service the loans like you're supposed to, because in the event the deal goes bad, the SBA is they're an insurance company for the bank, so they want to help you, but they got to make sure that they're following the rules so that you can get paid every penny on the dollar to which your guarantee was given.
Yeah, I would say similar challenge to James. At least a few years ago, SOP is and this is specific to the export working capital program, and I think it'll apply to the regular working capital program as well. But SOP can be very open-ended as to what it allows lenders to do. And so we really had to further define that internally. So back to your procedures and checklists and things like that. So, approving buyers, for example, like who, can you sell on open account terms, or do you have to have insurance or LCs or whatever the different requirements are? Sort of building out that process and those procedures was critical, because without that, you got a lot of key person risk. I mean, you'll have a person that sort of knows all this stuff, and if they're out or they leave, then you're stuck. So I think that was a challenge a few years ago. Every deal was SOP says you can do this if you're comfortable with it. And then you're always worried about the gotcha, I guess. I know, Dan, y'all don't have gotchas in SBA, but that's what credit and folks like that are worried about. So feel pretty good about that piece today. What is an ongoing challenge is just the way it is. There are a lot of hands on these loans. You've got a commercial banker, just on the trade side, 3 people touch it. On the SBA side, another 3 or 4 people. So you end up having like 10 people working on all these loans. And I think that's important to give the client the best experience and mitigate the bank's risk. But it is, it's not the most efficient process in the world. But you just figure it out and get it done. That's our ongoing sort of challenge, I would say.
Yeah, especially now with that famous phrase now, do as you do. I usually go on the conservative path when with the new rules that came out last year that kind of opened things up. It's like, yeah, some of these new rules, they're great. And yes, some banks may not require equity here or there anymore because the SBA is not allowing it. But, I'm going to still keep it pretty tight and do as I do and make sure I'm doing the kind of the conservative thing, even though the SBA says you can do it. I don't want to get bogged down and back and forth when a deal goes bad and they look at our policy, and for whatever reason we didn't make this small little change to our policy that didn't align with what we were supposed to do. And getting people all on the same page is incredibly critical, and especially not only just in origination but also in servicing. I make sure within 30 to 60 days after a loan is booked, I'm doing kind of a post-closing search just to make sure, okay, did we throw all these files into the electronic database? Did we collect all the UCC statement? Just to make sure that, we haven't moved on and the loan isn't completely closed up, because, I hate to come back to it 2 years later and the person that was working on it is gone, no longer here. So it can be a challenge, but, you have a nice system in place. It's not too challenging, but you got to have the proper employees in place.
Carson, and maybe you too, James, given the amount of people involved in the process, is there a sweet spot amount for this, for the SBA loans? If you can say something.
We'll do a lot for a relationship. I'll say it that way. But look, given the cost, $1 million and up is kind of what we would prefer to do. We will do smaller things than that for a relationship. But it would be hard for us at least to do really small, and that's where you go into the express product, I guess. So, but it would be hard to do really, really small loans with a product for us. Yeah,
for us, similar. We're able to kind of facilitate kind of anything between, whatever, 0 and 5 million for the SBA side. Obviously, our bank does conventional lending. Our legal lending limit is way above that. But I'm having issues on my end just to get things done when it comes to really small loans. I'm talking anything 100,000, 200,000 and under. We're a conservative bank. We want to make sure we're doing things right. But we're just, you can do the $100,000 loans, you can do the $50,000 loans, but they take up some time. And if you don't have the right policies and procedures in place, you're going to be, it's not. I mean, everyone wants to give small businesses loans, 50, whatever the dollar amount is, but at some point, it's not cost effective for the bank. And so part of my goal over the next, several months and years is trying to streamline these processes so that we can lend to smaller businesses to get their foot in the door in terms of financing, whether it's term loan or a line of credit. Because, if you think about all the people involved, the underwriter, the RM, the SBA program manager, the closer, I mean, there's 4 people trying to handle a $75,000 loan. The bank's not making a lot of money on that. And these are generally for-profit organizations. So, we have to do our best to try to facilitate the borrower, but at the same time, have it make sense for the bank as well. And if we can't do it, we do our best to at least try to find another path or refer them to another institution that is able to at least turn and burn these much quicker, rather than, sorry to say, dealing with me, who may, take you through the gauntlet a little bit to get things done.
Yeah, Daniel, my comment was really, it's specific to EWCP. Like we have a huge focus on small business, and SBA is a huge part of that. But it's just EWCP is, I mean, it's ABL lending, and you don't do ABL lending for $100,000 deals, right? I mean,
yep, and that's fair. I would say, to your point, like anything 500,000 and over, that's when I'm looking at a WCP or an EWCP. Anything below that, yes, you can do an export working capital program or WCP, but that's what the express line of credit's for. Give them a simple revolver where they can come and go as they please. But anything above that, that's when you start looking at monitoring these facilities where, it does take some time. And fortunately, the SBA allows us to charge extraordinary servicing fees when reasonable and prudent, because of the extra work that is involved in getting those facilities originated and serviced, more importantly.
And Dan, I don't know if you want to make any comments.
Yeah, I think both Carson and James hit on it, but we think that the $500,000 mark is about the line. Below that, we think most borrowers are going to be better served with an express loan. I think it's easier to administer from a bank perspective. And really, in the last decade or so, the SBA limits went from $2 million to $5 million in 2010. The SBA industry has grown significantly, and operational efficiency is necessary. So you want to have very clear lines in terms of when you deploy which product at which point. I tend to agree with Carson that about $1 million is about the sweet spot as a starting point. You can go below $1 million if you think the company is going to grow quickly, or maybe this is the first phase and the second phase will be above that. And you want to get them used to the reporting and start to get them ready for that next leap. But it's a lot of work. We tried to make the program a little more flexible between the $500,000 and $1 million mark, just recognizing, a lot of institutions who offer revolvers in that size range. $1 million is about the starting point. That's pretty common. So we allow for quarterly financial statements, quarterly borrowing bases, even if the lender's comfortable with that. Most default to monthly, but we think that that's really the starting point. So it's the express product, and then maybe WCP is the middle ground, and then it grows up.
Okay. We got a question here in the Q&A. Is there any different risk assessment from the compliance group for a WCP? And what would be the general range of lender charging the extraordinary service fee for ongoing monitoring of borrowing base under the WCP? That would be for...
I can take part of that. I don't think the risk profile changes on the product. I think it changes on the borrower and the buyers. So depending, if it's a trade heavy transaction, I think that would probably dictate more of the risk profile. The product side, the WCP is a lower guarantee, so that probably plays into it a little bit. WCP is the standard SBA 75% guarantee. The EWCP is at 90%. As far as the extraordinary servicing fee goes, again, it's a set amount. It's a capped amount at 2% of the face amount of the loan. It's an annual fee. So it's both that that's what we allow lenders depending on the work they're engaged in. But I think a lot of it is also, frankly, driven by competition and market conditions. We know that project financing, I think the PO, the heavy monitoring, heavy advance side of the program probably dictates often a higher fee. The ABL side for a monthly monitored line to a company that has the financial statements in good shape. Frankly, a lot of markets don't support charging extra fees on that. So I think a lot of it depends on the credit, depends on the lender, depends on the market. We do find the extraordinary servicing fee most common, looking at the EWCP book only, most common on the project financing side. But welcome James and Carson's take on that as well.
Yeah, I agree. It's the same for us. If we're looking at an ABL deal, well, to go back to risk assessment, yeah, I mean, not so much. There's not a big difference as it relates to domestic financing, but the export working capital and now the WCP. We're still going to be running. Usually, when it comes to new customers, I'm sending contracts or information on the client to our BSA department to kind of just kick the tires to make sure who they're selling to, what they're selling is on the up and up. We're looking at the XM limitation schedule. We're pulling an OFAC check to make sure they're not sanctioned. We're doing all the things necessary, probably at or above what the SBA even requires, just to make sure we're not running afoul and financing something we shouldn't have been financing and run into some sort of Department of Justice problem. Extraordinary servicing fees. What Dan said is generally accurate. I mean, when it comes to more project financing, it can be way more tedious. You're asking for documents, you're reviewing documents, dispersing, and then waiting for payment and moving monies around. Whereas a standard ABL facility, yeah, I mean, sure you can charge it, but it's probably not market. And most folks, if they're shopping banks and one's charging one and not the other, it's not market unless it's super tedious. Maybe it's more monitored and you have to check insurance credit limits and stuff like that. Then maybe there's a little extra there, but largely not on the ABL side.
Yeah, I don't have anything to add on the servicing fee side, but on the risk side, not so much compliance. I mean, we've got a pretty robust process built out for any line of credit on the front end, and then the ongoing piece is heavily monitored as well. I mean, there is from just a credit risk standpoint, obviously it's a lower guarantee, and so on the working capital versus EWCP, so it's kind of like keeping up with that, right? And things like how do you code a loan on, and this is back to my comment earlier about some of the internal approvals. You code loans on a system a certain way, and one of those codes shows a 90%, another code shows a 75%, and it's just kind of making sure all that's done the right way so you know where you stand from a credit risk standpoint. But compliance I don't see a difference between the two.
Thank you. And good one here. How can banks participate in the WCP program? Do they got a delegated authority? What is a delegated authority for those who don't know, maybe?
Sure, I'll take that one. So any SBA lender who works with the 7A program is eligible. So that's everybody. We have so normally pilot programs don't have delegated processing. Everything has to go through general processing. We have a dedicated team in our loan guarantee processing center, specifically in place for WCP. So the turn times have been very good. We're talking even some same day approvals. I think you submit it in the morning in the East Coast. LGPC is based in the Sacramento area. So you're looking at same day in many cases. But we did also think it was important, especially for our existing EWCP lenders to have delegated processing, right? The program is structurally very similar to EWCP, has a little more flexibility. So going to a Regions or First American who's familiar with the program and requiring them to go through general processing, that didn't sit right from a customer service perspective. So we were able to get delegated processing into the program, into the pilot program for the first time. So the first time an SBA pilot program has had delegated processing. It is its own separate tier. So it's separated from the 7A delegated process, which we call PLP or Preferred Lender Status or Preferred Lender Program. So you need to apply for it. And that's where Gayle, myself, Pat Hayes, who runs our East, along with our national team of export finance managers, who really are the subject matter experts on this, can work with your institution, both to evaluate the program, review it. And then if you decide to apply to work through the application side, the nominations for WCP are done in our office. So it's nominated by the FM, reviewed by a regional director and approved by myself. And that's on every transaction going in. So it's a little bit inside baseball, but long story short, we're here to work with you one-on-one on evaluating the program. And we think if you're here today, if you're involved in SBA lending, WCP will probably have some functionality for you, and we want to help you find it.
And I can attest. I probably contact our local EFM, Keith and Gayle, probably once a week on something. So they're all well versed, obviously, in export related items, but they're obviously tasked to handle the WCP. And so when I have questions, they usually get back to me quite quickly. And if they don't have the answer, they're talking to the other Dan on the call here for a pseudo final answer if something is kind of in the gray space.
Okay. Let's see. Someone raised their hand. I mean, just again, I mean, put your lines are muted, and if you could paste your question on the Q&A so we can address. I think we touched, but since this is a BAFT, I mean, focus on trade. I mean, any advice for the trade groups to work with the WCP? Yeah, I mean, I think we addressed a little bit, but maybe in the last couple of minutes that we have. Oh, or actually another one we have. If we want to submit a WCP through GP and not PLP, is it also approved by a local OIT office? Maybe that's to you, Dan.
We work in concurrence is probably the way to think of that. So we're here to support the transaction. We don't approve it necessarily, but we are there to assist because ultimately the ultimate approval at SBA, if you're not using a delegated status, is the LGPC and the team out in Citrus Heights. So we work alongside. It helps expedite it as well. We can also help with structuring on the front end, but ultimately the export finance manager can assist you with it. It's approved finally by the LGPC.
Yeah, and I can speak from just a current example. We have a client that is asking for a larger credit facility that kind of no longer meets our internal credit standards. So we're looking to refinance their current their current traditional loan here at the bank into a WCP, for which we, even though we're a delegated lender under PLP WCP, I have to go through GP. So what I'm going to be doing is sending it via ETRAN GP, at the same time indicating or emailing my EFM Keith and saying, hey, just a heads up, this is coming down the pike. Because this is such a new program, I'm assuming, as me just making an assumption, the person on the other end hasn't seen many of these. So I'm guessing the EFM and the servicing center are going to be working hand in hand to get these across the finish line as quickly as they can.
Okay. I think that's and a question here on I think we addressed the standby, but what about surety bonds? I mean, Dan, I mean, any comments on how to use with surety bonds? Is the same for the LC standby?
It's the same. The rules on surety can be found in the SBA's SOP, which is called 1.1 is the current version. But yeah, in general, there are situations where the WCP can be used alongside a surety bonded project. Those rules can be found in the SOP.
Okay. I think we're coming down to the end. I mean, thank you very much. I think if anyone has any more questions, please feel free to send to me and to BAFT. I'll address with the panelists. Any final words? And one thing I want to remind everybody's going to get a survey. Please respond. We do review this, the whole BAFT staff reviews, and we're looking forward for topics for new webinars and workshops. But any final words you want to say, Gayle, or Dan, or Carson?
Sure. Daniel, I just want to thank you. I want to thank the other panelists for being here today, for everyone who stayed on the line to hear about the new program. Our team is here to assist, so we're pretty easy to find online. You can reach out to us if you're interested in finding out more at the institution level. Thank you.
I concur with that, and thank you to the panelists for the great questions. Those were really good questions that you all asked, and thank you. And again, we're here to assist. Structuring, waiver structuring. We can walk you through the transaction training to get your trade groups, SBA groups on board. That's what we do. But thank you to BAFT and thank you to Danielle.
You're welcome. Okay, thank you. I mean, again, this will be available for on demand. In order to share, please create a BAFT account, and then we'll share within your peers. Thank you, everyone. Thank you very much. Looking forward for the next one.
Thank you.
Thanks, everyone.
Thank you.